Thanks everyone for joining us. We're going to wait a few more minutes for people to get fully logged in. We've got a lot of interested attendees, so I want to give everyone a few minutes here to get logged in and get started. Doing something a little bit different today. Seems like there's been a lot of interest in this topic around equity crowdfunding and how investors how they should think about investing in early stage startups under crowdfunding and equity crowdfunding in particular. So we've got some interesting topics to cover. Let's give everybody another minute or two. Probably not that long, but how about 30 seconds more? Hope everyone's having a good Friday. My name is Cary Breese, CEO and co-founder of NowRx, assuming most of you have been following NowRx already. So thanks for your support along the way. Thanks for joining today. All right, looks like I think just about everybody has had some time to log in. We'll get going. People can join along the way, join late, that's fine. In fact, the first couple of minutes are going to be a little bit introductory around NowRx. So the assumption is you guys have followed NowRx a little bit and just wondering more about what your investment, how it will work, how you get a return on your investment, what's the timing. So this webinar is going to be mostly focused on that topic. But I do want to just briefly cover for any of those relatively new to NowRx, maybe just learning about the company recently. I do want to just touch on kind of the basics about NowRx and then focus the rest of the presentation and Q&A around the investing side of it. So NowRx is a full replacement for retail pharmacy. We believe we have a disruptive model and technology and logistics to really transform the way people get their prescription medications. We're not just a delivery company. Some people hear about free same-day delivery for your prescriptions and they think NowRx maybe is a delivery company. We're actually the full pharmacy of record. We operate out of fully licensed DEA certified micro fulfillment centers. We have 9 throughout California and Arizona. We are expanding rapidly through Colorado, Las Vegas, Nevada, Bellevue, Washington, and Houston, Texas. We're on a nationwide expansion. One of the reasons why we're on Seed Invest raising money. And it's a full stack solution for pharmacy. We have our own pharmacists. We have our own inventory. We built our own pharmacy software that runs everything from the point a prescription is received from a doctor, the time that's delivered to a patient. We are the pharmacy of record. We just do it much differently. If you can visualize typical CVS or Walgreens, where the pharmacy is kind of in the back behind the counter and there's 2 or 3 people behind there, and the rest of the store is a bunch of other products that really have no relationship to pharmacy. We take that pharmacy proper outside of a retail location, put it in commercial space. We don't need as many fulfillment centers as a typical retail pharmacy would because patients aren't coming in. All medications are delivered free, same day, usually within a few hours. And we even have a 1-hour delivery window as well available for urgent medication. So all of our micro fulfillment centers are a third the size of its traditional big chain pharmacy, costs us a third the cost per square foot. And we need 1/20th as many locations because we're doing delivery. So we have a huge savings on fixed overhead. That's how we're able to absorb the cost of delivery. And then we also have further cost savings inside the pharmacy, more efficiencies. We use robotic dispensing machines. We have our own pharmacy software that streamlines what technicians do. We have broken down a lot of the silos in the industry with our system, the way it communicates with physicians, with pharmacists, with patients, and with insurance payers. And so we create a far better patient experience, a better patient health outcome through better coordination. This in turn saves dollars to insurance companies and the health insurance industry. We cut down on the time that physicians need to spend on pharmacy and insurance company resolutions. And so there's a whole host of stakeholders that the NowRx solution really responds to and solves. And so we really are excited about what the future market holds for us. We're gaining market share rapidly, just closed last year at 22 million in revenue, up from 13.5. We're projecting 35 million plus this year. The big competitive advantage that we have is not just the delivery side of it. Obviously, a lot of companies can deliver, but what we do inside the pharmacy with our pharmacy management system, we call it Quick Fill. It's got a host of features, again, across all stakeholders involving coordination with physicians and insurance company in the claim adjudication, the way we manage inventory, the way we coordinate with customers, the chatbots we use, the machine learning we use and deploy for the way we manage our inventory. So we have a very defensible, we believe, and differentiated experience where even other players that can offer delivery of pharmacy products and prescription medications will not be able to touch our customer experience because of the software that we've built. This is a fully modern based technology system built for and optimized for a same-day delivery pharmacy model. All right, so that's sort of just the overview of NowRx. There's a lot of information you can find on seedinvest.com. If you want to learn more about NowRx, we've done plenty of webinars just on NowRx, who our competitors are, what our competitive advantage is in more detail, how we compete, how we're building the company, how we acquire patients and customers. All that information is available. There's plenty of webinars available. You can find that on seedinvest.com or come to nowrx.com. But let's talk about equity crowdfunding and what this all means and how does an investor, how should you really be thinking about investing in an early stage company like NowRx under an equity crowdfunding framework or legal regulatory framework. So we're going to cover a few things here and we're going to turn it over to Q&A. I don't have a lot of slides, just 3 or 4 slides, and we'll take questions, and I'll be here for the whole hour. So get your questions ready. I have a moderator that's going to feed those to me. And if we don't get to any of your questions, even at the end, we'll post them on the comment section on our Seed Invest profile. So I want to talk to you about what is equity crowdfunding. Crowdfunding is kind of a loose term. It started out with Kickstarter. We're going to talk to you why this is actually quite a bit different, what we're doing and what other companies under equity crowdfunding are doing as opposed to regular crowdfunding. How's the NowRx share price performed over the last several years as we've raised more money? In each round that we raise, we've been functioning and raising money on seedinvest.com, and you'll be able to see the historical performance of our share price for investors that have invested previously. And how do you make money? How does an investor actually invest money in NowRx? What is the result? What's the end game? What's the exit? What does it look like? What's the timing? I'm going to walk you through that with some examples, and then we'll have a Q&A like I mentioned. So equity crowdfunding, that term really means something. If you hear the term crowdfunding, but you don't have an equity in front of it, that's not someone being just lazy. It actually could be a completely different type of crowdfunding. So crowdfunding started a long time ago with things like Kickstarter and GoFundMe, Indiegogo. In most cases, the way those crowdfunding opportunities worked is you would get sort of an early opportunity to get an early product, right? Maybe someone was selling skateboards. I'll use just a dumb example. And if you gave them money early before that product was out, you'd get you'd be first in line to get a skateboard when that product finally went to market. So that is not the kind of crowdfunding we're here to talk about today. That is fairly, unregulated. You're not really owning an equity piece of those companies. You're just giving them an investment up front, and they're going to promise you some product later when they go to market. What equity crowdfunding is, and you'll also hear it described as Regulation A. If you go to seedinvest.com, you'll see opportunities to invest in a variety of companies. Some of them will have a Regulation A next to their name, and that indicates it's equity crowdfunding. What does that mean? There was a J.O.B.S Act that was passed. It's almost 10 years now. In fact, I think it is just now 10 years anniversary on the J.O.B.S Act. under the Obama administration. Did a bunch of things. One of the things it did is it created a new category of company called an emerging growth company. And so what essentially happened is the SEC was trying to lower the barriers and make it easier for companies to go public, because the SEC is aware that it's really hard and expensive for companies to go from private to public. You need a lot of money, you got to get underwriters, and you're spending probably millions of dollars on lawyers and a bunch of other hurdles, financial reporting requirements. So it's a big lift for a lot of private companies, very expensive, big lift. And the SEC wanted to make that better. They wanted to make it easier. They created a third type of company. So in the past, there were two types of companies: private companies that don't list their stock, that nobody can invest in unless you're a professional venture capitalist, or you're a public company, right? Those are two different kinds. A public company, anybody can invest in. You don't have to be a VC to be able to invest in a public company, and you're listed on a stock exchange. The SEC created a third category of company that is a hybrid of those two. It is a private company. It's not traded on a public market anywhere. You can't get their stock on a stock exchange. And yet there are some aspects of public company as part of the nature of an emerging growth company under Regulation A, an equity crowdfunding company, where anyone can invest in that company. It's just not on a public stock exchange. Now, in order to earn that right as this third type of company that is now available, an emerging growth company, in order to earn that right, to allow your stock to be sold to retail investors, anybody that's not necessarily a professional VC, you've got to go through some hurdles with the SEC to be able to allow that. For most private companies, a retail investor that's not a private VC, a professional VC, is simply not allowed to invest in a private company. You're not allowed to do that unless you're what's called an accredited investor, high net worth individual. So like when Google was just getting started before they went public, if you weren't a VC, you're not investing in Google. You weren't qualified to do it. You weren't accredited, and it just wasn't an opportunity. And so if you are an emerging growth company, this third type of company that the SEC created under the J.O.B.S Act, you now can have investments from any investor, whether you're a professional VC or a retail investor, but you can't find the stock on a public stock exchange yet. You have to go to platforms like seedinvest.com, and there are some other companies as well out there doing that, like WeFunder and Start Engine or some other platforms. And the reason the platforms sell the stock, it's not some scam. It's because the SEC puts a bunch of regulations around companies that are qualified as an emerging growth company and selling stock to retail investors. They want to make sure that the retail investor is getting all the disclosures and information that the SEC wants you to have. And so you can't just go put an ad up outside and just start taking investors. You can't just have people walking in your door and handing you money. You have to have disclosures and filings with the SEC that are at one click away for a retail investor. Now, the only way to do that is to have a web portal, and that's why these platforms exist, and that's how they operate, is to protect the retail investor. So rather than being some shady scam, the reason SeedInvest exists and other companies like that is to provide all the necessary disclosures, risk factors, and information like audited financials and things for retail investors. Okay, so it's a very heavily regulated environment. You have to qualify as an equity crowdfunding company. So NowRx has been qualified by the SEC. You can't just decide to be an emerging growth company and start taking investments like you can on Kickstarter. Remember I said Kickstarter's really completely different animal. Anybody can invest in any Kickstarter company, and those companies don't have to be qualified at all. If you're going to be an equity crowdfunding company under Regulation A, like NowRx, you have to first qualify with the SEC. And to be qualified by the SEC, you have to have 2 years of audited financials. NowRx has been crowdfunding now for almost 4 years. So we actually have 5 years of audited financials. You're not going to find that in almost any other private company. I guarantee you, Google did not have audited financials when they first started their company. And so NowRx is a financially audited company. The other thing you need to do to qualify with the SEC is file what's called an offering memorandum. This is sort of like an S1 that you would see if you guys follow public companies and IPOs, and we're going to talk about that. But it's a document filed with the SEC. It's about an 80-page document that the SEC reviews and approves or not. They come back with comments. They come back and give you feedback, and they can reserve rights to qualify you and say, no, you're not qualified yet. So if you're an emerging growth company, if you're an investor looking at an emerging growth company, understand that this company has been vetted, financially audited, qualified by the SEC, and also because of this qualification process, has to file public reports with the SEC twice a year. So this is one of the hybrids, blends between a private and a public company. Some of you may be familiar with public companies that have IPO'd. They report 4 times a year, every quarter. That's the way the stock market works. So equity crowdfunding is a little bit lower reporting than a full public company. It's twice a year reports to the SEC instead of 4 times, but it's still reporting to the SEC in a public manner. You have to continue to do audited financials. And so that's why, again, it's a path from private to public IPO. It's a hybrid in between those two. And the reason it's a hybrid and a path in between those two is because the SEC deliberately wanted to create a path between private and public. This was the whole purpose of the Regulation A under equity crowdfunding, under the J.O.B.S Act, was to create a glide path for private companies that want to get to a public IPO and to lower the barriers to get to that. It's an on-ramp for private companies to go public. That's one way to think about it. But very highly regulated, extreme scrutiny by the SEC, and from a certain respect, fully public reporting. Twice a year instead of 4 times a year, but full public reporting. So little background on when you see equity crowdfunding, what that means. You go to seedinvest.com and you can see companies that have Reg A next to their names, and you see other companies that are, Reg D or Reg C, which is just kind of the crowdfunding Kickstarter thing. I look at it as crowdfunding heavy, crowdfunding light. There is a world of difference between a company on Kickstarter or Indiegogo that hasn't gone through its qualification process, has no audited financials, hasn't been scrutinized by the SEC, does no public reporting. There's a big difference between that world and equity crowdfunding or emerging growth companies like NowRx. You can find out more about that. You can just Google emerging growth companies under the SEC. The SEC itself talks about this, what the qualification process is like, and all of that. So understand that investing in a company like NowRx, you're investing in a heavily vetted company, a heavily scrutinized company, and one that is publicly scrutinized on a regular basis. This is the type of disclosure that the SEC requires if you are a equity crowdfunding or an emerging growth company like NowRx. And so just want to put this up as an example. This is the required type of disclosures. Again, the SEC wants to protect investors. They really put a lot of regulations around that, and this is part of it. All right, let's talk about investing and making money and what does it really mean? Again, equity crowdfunding, that word equity is there for a reason. When you own equity, it's because you are a shareholder. You own a piece of that company. You have equity. You have equity in the company, and that's what this is all about. And so when you invest in a Reg A company, an emerging growth company like NowRx, you get a share. You get shares of stock in that company. You own those shares of stock. No one can take that away from you. You own it, just like if you buy a stock in a public stock exchange, you go buy stock in Google, you own those shares. If you invest in a crowdfunding company like NowRx, a Reg A company, emerging growth company, you will get and own those shares of stock. Now, the one difference is you can't just turn around and sell it because there's no public market yet. So the emerging growth companies are not yet traded on a stock exchange. The way you buy the stock is you go to a platform like seedinvest.com. That's how you buy the stock. And if you fill out all the information on seedinvest.com, you open up a free account, you go through the steps, you will own stock at the end of that process. Okay. It's just, you can think of it like the stock exchange, but for emerging growth companies. So investors that have followed that process with NowRx during our seed round in 2017, when the share price was $1 per share, investors that bought that stock, they owned one share for every dollar they invested. The share price in our Series A round in 2018 was $2 per share. So any investor that invested in the seed round at $1 a share, and then at this time of the Series A round, they doubled their value of their equity holding. Their share price, just like in a public market, doubled in value. Again, you can't sell it just yet because we're not yet a publicly traded stock. And you actually can sell it in a Reg A environment. You just have to find another, you have to do all the work to find the other investor. There's no public market where investors are standing in line and there's an exchange there. You can actually sell the stock, but you have to do the work to find another investor, right? We're going to talk about what happens next when we, transition to a fully public company in an IPO or we get acquired. But for the time being, if you invest in NowRx, you own the shares. The shares are going up in value. Every time we do another round, our history has shown we've had a good track record of increasing value. The Series B in 2019 was $3.45 per share. And the Series C today, the round we're offering now on seedinvest.com, is $10.50. So if you were an investor that invested in the seed round back in 2017 at $1 per share, that share, every share you bought is now worth 10 times that amount, $10.50. So if you invested $100 back in 2017, that value of that investment is now worth 10 times that, or $1,000. Okay, so you still can increase your share value even though it's not publicly traded. And there's no guarantee there, but we have a good track record of increasing share price round after round. And our hope is when we go IPO, and I'm going to talk about how that all works now. When we go IPO, we expect to have a higher share value than it is today. You can look at IPO share prices, $80, $100, $50. We don't know exactly for sure what it's going to be when we go IPO, but that is how your share value will go up in time. That's what we are targeting. That's what we work on every day. We have shares in NowRx too, and we work very hard to try to increase the value of those shares. So when we go IPO, we can actually have an exit and get a result for our investment. So works very similar to any other company that has stock and then stock is trading. It's just not traded in a public market yet as an emerging growth company. Your mileage may vary. So caveat here, we don't know, no guarantees that the last 5 years of NowRx increasing share price will continue for the next 5 years or the future. We don't know that. We can't guarantee that, but that is our goal and that's what we're working on every day. All right, so let's say you invest today. I showed you how the share price can go up over time. No guarantees, your mileage may vary, but that's what we anticipate. That's what we're working on every day. But what good does that do you if you can't get an exit and get those shares sold to another person? Well, that's the goal. Our goals are to build a company and get it out to an initial public offering, an IPO. That is when a private company or an emerging growth company becomes a publicly traded company. That's when the shares that you own, if you invest today, become traded on a public stock exchange. They're not traded today. The only way you can buy them is go to Seed Invest. The only way we can sell them today is to find an investor that wants to pay you money for it. And you do have that right as a Reg A share. But we are anticipating and planning to go to an IPO in several years. And then the stock will be traded. If you own stock and shares in NowRx and you bought them at $10, if we IPO at $50 or $100, you can then sell that stock, right? That's what the whole idea is for going public and having a public exchange with your shares. So we don't know the timing of an IPO. Everyone asks. It's a favorite question I get on the Seed Invest forum. When are you going IPO? If I knew exactly when we were going IPO, I'd have a really good crystal ball. Depends on a lot of things, guys. Thousands of things. It depends. Are we going to be successful executing our plan? Are we going to have continued access to growth capital to build up the company large enough where we can sustain a successful IPO? Will the IPO environment continue to be favorable for IPOs? Some years IPOs aren't as successful as other years, right? And you can look at that over history. Whole host of things. Will the regulatory environment change? Will the competitive environment change, right? Will there be another war that breaks out? There are a lot of variables. You'll never get from me a prediction or a date on when we're going to IPO. So just don't even ask. We don't know. We're working on an IPO. That's what we work on. I brought in a CFO, Mark Marlowe, who has taken several med tech companies from startup to IPO. Why did I bring him in? Because I'm building towards an IPO. I want to do an IPO with NowRx. We're also bringing in a financial auditor, a Big Four accounting firm. We're building financial controls. We're building a company that is going to be a successful IPO in our view. That's what we're trying to build, right? But there's no guarantees and we don't know the timing. If you look at most startups, if you look at the history of startup companies, there are stats available that on average, if you look at successful startups from the time they were founded to the time they IPO, it's about 10 years. Now, some companies do it sooner. Some companies do it in 3 or 4 years. Some companies do it slower. We don't know. I'm not going to give you a date, but if you want to use that as a gauge, NowRx was founded 6 years ago. That's not a bad estimate in my view. Will probably be 2 or 3 years, potentially slower, potentially sooner. But that is what we're building towards. So if we go IPO, when that public stock is listed, you can turn around and sell your stock. If you bought it at 10 and it sells for 100, you get the difference. I'm going to walk through that example right now. We may also get acquired by another company, maybe before we go IPO. That's possible, right? Maybe CVS gets religion and realizes their model is being disrupted and they need technology to really make free same-day delivery work and make the logistics work effectively. No, they don't offer free delivery today. They offer free mail delivery. That's giving you a medication in 5 days. That's not the same as same-day delivery. Yes, they do same-day delivery and they charge you $8 per delivery for that. So I get that question sometimes. Doesn't CVS do this today? No, they don't do this today. They have too much money invested in overhead and rent, and they don't have the technology to really make this model work effectively in our view. So they may come and buy us. Maybe they give us $1 billion check and say, we like what you guys have built. We want to take over that company. So what happens with if we get acquired? Well, if we get acquired by a public company like CVS, what they will do is they'll give us some combination of cash and stock for every share of NowRx. So the NowRx shares that you're holding as an investor will convert to a share of CVS stock, and you can then sell that stock. And we don't know what the multiple will be. We don't know how many shares of NowRx will trade for how many shares of CVS, but whatever purchase price they give us, they will convert that into a value per share for NowRx and then give us that number of CVS shares that make up that value, right? So that's how it works. So We get bought by CVS for $1 billion, that's going to be a share price of $100 or something like that. You can then turn around and sell it. It'll be like a CVS stock, though. It won't actually be a NowRx stock. What if we get bought by a private company that's not yet public? Well, then you go back to the beginning. Oops, sorry, went the wrong direction here. Then you go back to the beginning of looking for an IPO. So if a private company were to acquire NowRx and maybe a PE company or hedge fund or something, they may keep us private, but they'll certainly try to build us to an IPO as well. And so it's really back to where we are today, trying to build towards that IPO. So both of those are possible. We're building towards an IPO. We could get acquired. I don't know. My crystal ball, I broke my crystal ball a long time ago. We'll see. So the example, just to put a finer point on it, if you bought a share today in NowRx for $10.50, we go IPO in 3 years at $100 a share, you get the difference, which is $89.50 in your pocket. You can sell it that day. So that's the way it works. We may possibly go sooner or later. It may not be $100. We don't know. Your mileage may vary. I'm saying it again. I'm on recording. We don't know, right? We just don't know. We can't predict the future. I don't want to try, but this is what we're building towards. This is what makes me excited. This is why I run to work every day. I want to build a company that can go IPO in a few years at $100 a share. Everything I do, right, every day, including this presentation, is to help build a company to get to that point. So that's what we're all working together. If you buy shares in NowRx, you're sitting right along with me as a shareholder in NowRx, and our interests are perfectly aligned. Is there risk? Yes, there's risk. If you invest in startup companies and early stage startup companies that aren't yet public, there's some risk. There's no question about it. There's an old adage in modern finance theory. Risk varies with reward. Sorry, I got tongue-tied there. The more risk you have, the more reward you're going to have. And in fact, if there's an opportunity for big reward, I guarantee you there's more risk in any part of life, in fact, not just investing. There's no free lunch. If you want to have the safe path all the time, you're going to have to withstand a lower possibility of reward. So there is risk in early stage startups, but the mitigation here is quite substantial. Again, we are an early stage company that's been vetted by the SEC and qualified by the SEC. We have audited financials. So there's no cooking the books here. There's no hiding numbers. We are a public company from an information perspective. You can go right now to sec.gov, do company search, find NowRx, and you can find the last 4 years of our semi-annual reporting to the SEC, including audited financials. So there's nothing up our sleeve. We are one of the most transparent companies that you have an opportunity to invest in at an early stage, bar none. So Reg A companies do provide a lot of protections for investors. There's a guy there down on this slide, Harry Markowitz. He is the founder of modern portfolio theory. So go Google MPT, modern portfolio theory. He's the guy that sort of pioneered the efficient portfolio and efficient frontier. And basically everyone understands this intuitively as saying you need to have a diverse portfolio, right? You want to have investments in your portfolio that are not correlated. You don't want to be all your investments go up and down with, say, the economy or real estate. You want to have diversity, a diverse portfolio, different types of investments. Most people understand that intuitively if they've had any kind of economic studies at all. And so I think for me personally, I do think it's a good idea to have investments, a small part of your portfolio that you can withstand some losses in, that have a higher beta or a higher volatility, a higher opportunity for reward, and you put that in your portfolio, and overall your overall portfolio will perform better. I mean, there's science behind that. I also think, pharmacy is a really interesting industry. It's been around for hundreds of years. It hasn't been innovated yet. So there's a huge opportunity for innovation, but it's highly recession proof. It's highly war proof. There are a lot of bad things that could happen in the world, and people are still going to need their medications day in and day out. So a couple other, comments like that. I think if you think about it and are thinking about your portfolio of investments, I think it could make a lot of sense for your portfolio. But look, bottom line, there is risk. I tell everyone, don't invest anything more than you can afford to lose. But if you're looking for an opportunity to get into an early stage company, like imagine if Reg A crowdfunding existed when Google was being formed, or Facebook. It didn't even exist back then. And there was no opportunity for retail investors to get involved in early stage startups. And now there is. And that's exciting to me. Just as a finance person and an American, frankly, I get excited about this. This is democratization of early stage startups. It's kind of like, you see things like Robinhood and cryptocurrencies, equity crowdfunding in my mind is sort of in that vein. Like there's a democratization going on now where retail investors are getting opportunities to invest in opportunities that they couldn't before. And so the Jobs Act is a huge thing. It's the 10th year anniversary. It's really changed the landscape for retail investors, and I think in a really good way. All right, that ends the presentation. I hope I didn't drone on too long. We're going to do Q&A. Before I forget, please follow us on social media and check us out on seedinvest.com and nowrx.com. And right now I'll take some questions. I'm going to start looking at my Q&A chat here. My moderator is bringing me questions, and I'm going to look to see what questions he has queued up for me. So just bear with me. Here they come. All right. Question number one, guys. And again, if we don't get to your questions, we'll try to post them out on the seedinvest.com website. If you go to NowRx, and there's a comment section and a forum there that I'm pretty active on. A lot of people are active on there, actually. All right, question number one. I understand the SEC rules, but when do you project real growth? You have grown, but Cary stated you're projecting around 30 to 35 million this year. Your competitors are growing way faster. With your national expansion, I would think that growth would be greater and faster. Okay, fair enough. When do we expect to project real growth? We are growing at the pace that we are fairly comfortable with. I mean, you'd always love to grow faster to a certain point. But one of the things we've focused on in the last 4 and 5 years is building the better mousetrap. We've invested millions, tens of millions in our quick fill technology, our pharmacy management software, which is revolutionizing what happens inside a pharmacy. There are competitors that chose a different path, and they figured, hey, we're just going to do delivery pharmacy. We're not going to worry about what happens inside the pharmacy. We're not going to worry about building any new technology inside the pharmacy. We're just going to start doing delivery and go after market share. I think that's a huge mistake. Me personally and our board, we don't believe that strategically is the right move. We think they're going to lose that market share through bad customer experience. Pharmacies, a lot of things go wrong behind the scenes. 33% of Americans have had a medication turned down by insurance in the last year. Another 30% have experienced an out-of-stock item at their pharmacy. Another 15 to 20% of patients have had their physician not authorize the refill on time, have poor communication with coordinating the original prescription. And so if you don't do anything to change the software that runs pharmacy, you're going to promise same-day delivery, and you're going to have to tell a huge swath of your patients that you're sorry, but you can't deliver today. Even though you said it, you said you're a same-day delivery pharmacy, you're not going to be able to deliver it today because the insurance company rejected it. They need more information. It's going to take a few days. Got to call the doctor to resolve an error with the message that came across or the refill authorization. So can you please step aside in line because it's going to be 2 hours before I hear back from the doctor, or it might be tomorrow, or sorry, we don't have it in stock because we didn't manage our inventory well using modern technology like machine learning. So we just can't get it delivered today. If you want to do that as a competitor and just go after market share, you can do that. And some of our competitors have done that. And their experience for customers is terrible. Just go look at Capsule and go look at their Yelp reviews. 30% plus of their Yelp reviews are 1 star. And you think that's a modern customer experience? I don't. Do they do delivery? Yes. Do they have any software or done anything inside the pharmacy to make the industry better, to break down the silos that exist and improve collaboration? Not that I've seen. You look at NowRx's reviews. So we've spent the time building a better mousetrap. That's what's going to win long-term in our view. But people can differ from that. And whoever's asking this question, I appreciate that. A lot of VCs think that way too. They think grow the top line at the expense of everything else. I don't believe that. I don't think that works in healthcare for sure. Same people thought that was true with Theranos. Just grow the top line and don't worry about whether you actually have anything that actually works. That's not my move. That's not what we're doing in NowRx. There are other companies you might be able to invest in that want to grow the top line at all costs. We haven't done that up to this point because we've been building a better mousetrap and a better technology platform that's going to differentiate us from Amazon, from Capsule, from Alto. We are growing nationwide and our growth is going to accelerate. If we're not growing fast enough for you, I would suggest you look elsewhere. Every new territory we grow is going to layer on top of preceding territories, and we do believe it's going to accelerate going forward. We're seeing that already. I'm going to report my March results next week. Stay tuned for that, whoever answered this question, and you can message me on the forum about what you think about our growth rates. But we're trying to grow the company. We're doing it in a smart way, we believe, and I think you'll be pleased with the growth going forward. Question number 2. With all the capital in the market, why do crowdfunding campaigns versus getting VC money? Crowdfunding has a lot of advantages for us. We talk to VCs. We'll probably raise money from VCs and PE in the future. We've talked to PEs and VCs along the way, but crowdfunding is great. Every investor we get in crowdfunding is a brand ambassador. I have 10,000 brand ambassadors throughout the United States, all in bed with us, aligned with us about success of NowRx, going out there, building up the brand awareness and recognition. I mean, you should see the hit on our website where we have there's a place on our website where it says, build a NowRx pharmacy near me. We're building a national brand. It takes a lot of work, and to do that efficiently, we think crowdfunding is the best path up to this point. Not against VC funding, not against PE funding, but for us, it's been great. It's been a great experience, been really rewarding. Like I say, I'm a big believer in sort of the democratization of early stage company investing, and it's been a great way to grow the company. It's a great opportunity for companies and entrepreneurs to focus on building what they want to build and not get pulled to the side from a VC on the board or a PE guy or a hedge fund that just wants to push you in a different direction. So it worked for us. We've been really happy with it, but we're not ruling out, different kind of private equity rounds in the future. In fact, we'll probably have something to say about that in a few weeks. Question number 3. Is it possible that NowRx could get acquired prior to an IPO? Yes, I laid that out in the PowerPoint presentation that we just talked about. That's certainly one of the possibilities. Plan A is to go to an IPO. Plan B is we may get acquired before hitting IPO. If the number is right and we think it's the best path for shareholders and creates the most shareholder wealth, including for ourselves, then that's the way the board is going to vote, right? And shareholders will have to vote too. That's the other thing I didn't mention. Can't believe I forgot that. As an equity holder in NowRx, when you invest in NowRx under Reg A, you do have shares and you do get to vote those shares, right? Big oversight on my part. Yeah, you get to vote, right? And any change in ownership, if we get acquired, you get to vote. You're going to get to vote your share the way you want to. And if it's not a good enough price being offered by an acquirer, then vote no, right? And so we'll be out there, we'll be having shareholder votes, you'll be able to participate in that, but every share that you invest in NowRx has a full vote. It's a good feature of Reg A. Again, it's a really innovative thing that's happened in our society. Not a lot of people understand it, that there's now this third category of company that allows retail investors to get in early, be a shareholder, vote your shares, ride along with the founders in the growth trajectory and the increasing share value. I think it's a great thing. Question number 4. Sorry, guys, my moderator is just bringing these through. I may not get to all your questions. We'll post them. Get out there on the forum, cinvest.com. Look at the NowRx profile. Get on the comment section. Hammer away at me if I don't get to your question today. Well, I'll be out there. I respond. I'll get out there on the weekends. I'll get back to you. Believe me. Question number 4. Some seed invest companies did reverse stock splits. Is this something you would consider? If it made sense and the board voted on it, and that probably needs to go to shareholder vote as well. I think too much is done of stock splits, either reverse splits or regular splits, frankly. I think that's a lot of psychology, mumbo jumbo. That's my personal view, but we would certainly review that as a board and vote accordingly. Again, what we think is the best way to create shareholder value. The board has to do that. If we don't do that and operate in the best ways in the fiduciary proper way to increase and enhance shareholder value, we get fired, we get sued. Like, everything is aligned to help shareholders. And so, if you are a shareholder, you invest today, you get that protection. Another question. Some seed invest companies said that there was a 6-month holding period before we could sell the stock. Look, it depends on the IPO. If there's a holding pattern, a market set off. As an emerging growth company, Reg A company, I don't believe that is true for a Reg A company. We also could possibly do a direct listing. There's some other options there. So look, whatever happens when we got IPO, everyone gets notified. Every shareholder gets notified. What are the rules? What are the opportunities? What's the soonest you can sell? All that information will be filed with the SEC, publicly available for everyone to review. It's full transparency, guys. Under Regulation A. This is an SEC regulated company you're investing in, right? Full transparency. There's nothing that we're doing that's impactful or material to a shareholder that won't be publicly discussed and messaged and advertised. Question number 5. Is NowRx cash flow positive? Is there capital being used for daily operations or expansion? We're not yet cash flow positive. We're investing in growth. We're opening up new locations. We just announced new territories we're opening up in Colorado, in Nevada, in Washington, and Texas. More territories coming soon. We see tremendous opportunity here. We think we got a better mousetrap that's defensible, that's clearly differentiated against our competitors. And Yelp reviews back that up. And so we're investing in growth. We're not planning to be cash flow positive for the next several years. Now, within certain territories and certain micro fulfillment centers, we do plan to get to profitability there for some of the more mature territories. But as we're opening up more new locations, they generally run cash flow negative until they expand and get to bigger volume with customers. That takes some time. And so we're investing in growth. So we're investing in expansion. We're investing in technology, R&D. We're continuing to push the needle in terms of pharmacy technology and pharmacy software. We have 2 patents pending on our quick fill system. We believe there's more patents to develop, and we're working on that. And so we're investing in R&D, we're investing in expansion and marketing, both of those. Question number 6. If after going if after NowRx goes IPO, how do we sell? It's very simple. If we go IPO, we're going to be a publicly traded company, probably on the NASDAQ, and you're going to have to open up a free brokerage account or Robinhood or something similar. And you're going to be given certificates of your shares and information that gives you the ownership that you can demonstrate to a broker, any broker, and you put in an order to sell. It's that simple. And you'll get this paperwork. When you go through the Seed Invest process, you'll get those certificates and ownership documentation that you'll be able to, when we go IPO, just like any other private company that goes IPO. How does Google, when they first IPO, how did those original investors in Google, VCs, and those original shareholders, how did they sell their stock when they went IPO? You're going to be in the exact same position. The company's going to go IPO. You're a shareholder, just like I'm a shareholder. We're both going to go to the stockbrokers and sell our stock. It's going to be the exact same process, same stock, same everything. So it's pretty simple, guys. When we go IPO, you get to turn around and sell your stock. There may be a 6-month set off. I'm not sure. I think when we go emerging growth, I'll put that information on the Seed Invest forum. But when we're publicly traded, you can sell your stock. Do we need a broker to sell? I answered that question. Yes, you'll need a broker. There's some free brokers out there where they charge you like, I think like $1 a transaction, or I don't know what I don't play in that game right now. I have all my shares in NowRx, so I don't do a lot of trading, but there's discount brokerages now. You can sell your shares for a very low fee. In fact, I think there's some free now. I think Robinhood is free, actually. Question number 8. I have a few questions relating to the class of shares offered on CrowdCube that of preference shares. I didn't quite understand that, a little garbled. Bear with me while I read this, guys. How are preference shareholders affected by the many additional money raising rounds? I notice a reasonable increase in the price of ordinary shares. What is the existing value of these preference shares? All right, they're asking about preferred shares. So what we have sold, so there are 2 classes of shares at NowRx, and most companies fit into this. There are common stock shares, and there are preferred shares. And what you should know is when we sell shares to investors, we sell preferred shares. Now, preferred, if you think about that word, it's got a positive connotation in it, and it's there for a reason. Preferred shares are preferred over common stock because they get liquidation preferences. And what would happen is if we got acquired by another company, the preferred shareholders get paid first before any common stockholders. So the shares you own, you buy, and this person was asking about CrowdCube, but it doesn't matter. You don't have to know what CrowdCube is. They're kind of like Seed Invest, but in the UK, every series of shares that we've sold, Seed, Series A, Series B, and now Series C, are all preferred. The only shares investors own are preferred. And if we get acquired, you get to sell your shares before my shares, my common stock shares. So you have a preferred share. What's the value of preferred shares? When we go public, the preferred shares get converted into common shares and get sold right alongside with common shares. So if we get acquired, there's a difference. You get priority in selling your shares. If we go public, your preferred shares get converted into common and we're all the same. So the preferred shares are the same value when we go public, but you have a preference if we get acquired or if we get liquidated or something else like that. That's the way preferred shares it's not really you're not valued differently when we go public. It's the same thing. And you get the same number of voting shares. So the voting classes at NowRx are the same. Common stock, 1 vote per share. Preferred stock, 1 vote per share. Do we plan to expand to the East Coast? Absolutely. We're embarking on a nationwide expansion. That's why we're raising capital. Part of this round is to further our reach throughout Western states. We will be raising additional rounds. Look, everyone worries about dilution. Let me just talk. I have a couple minutes left here. Dilution. Dilution is a problem only if the step up in valuation is not also outweighing the dilution. So if we raise further rounds, the question is, what's your share price do, right? And so I showed you that slide that showed all the shares from prior rounds. Seed investors came in at $1 per share. When we raised a Series A, guess what? There was dilution there. But the Series A went out at $2 a share. So despite the dilution, anybody that invested in the seed round at $1 per share got double the share price after dilution. So it's $2 a share. Just focus on the share price. What's the share price? If you invested in Series A at $2 a share, we did a Series B, caused dilution. We did Series C, caused dilution. The Series C share price after all that dilution is $10 a share, 5x plus your Series A investment. So don't worry so much about dilution, or worry about dilution, but worry about what's the step up in value. So when we raise another round, what's that pre-money valuation? When we raised our Series B, NowRx was valued at $65 million as a company. When we raised our Series C, we're valued at $275 million as a company. That's the step up in value. Because of that big step up in value, the dilution doesn't matter as much because your shares went from $3.45 in Series B when the company was valued at $65 to $10.50 in Series C at a $275 value. So, a lot of guys ask me this question, dilution is going to kill my investment. What's your share value? If it keeps going up in value, that's what your return is. All right, guys, I'm going to stop it there. We'll put some questions out there, again, on Seed Invest, NowRx, on the forum section, the comment section. There's a lot of comments there. View more posts, go down, read all the stuff. I'm out there all the time. You can go to SEC, SecurityExchangeCommission.com, do company search, type in NowRx. You can see more information. I promise you, you'll see more information about NowRx than you've ever seen in any private company or early stage startup in your life. We are fully transparent, 5 years of audited financials. It's all out there for you to review, qualified by the SEC, emerging growth company. We're now on a glide path to IPO. That's the whole purpose of emerging growth companies under the SEC, 10-year anniversary of the JOBS Act. Hallelujah. It's a great opportunity for entrepreneurs, and it's a great opportunity for retail investors to get an opportunity at a truly early stage startup that's growing rapidly that hopefully can produce some really outsized returns. Thanks, everybody. Have a great day. Happy Friday. Have a good weekend. We'll talk to you next time. And by the way, this will be recorded and distributed in case you want to share it. Thank you. Don't forget to follow us on social media.